Blackrock CEO Larry Fink and chairman of the company. Blackrock is the world's largest asset manager with $5.4 trillion in assets under management. And Larry, thanks so much for joining us. So you, Blackrock, also reported earnings this week. Could you characterize what you saw and what that means for the company where you are today?
Well, we saw huge interest in putting money into the market. We have had a wall of money sitting on the sidelines, and I think we began to see more interest in investing, certainly after the presidential election, which carried on that rally. And it really carried on through the first quarter. In total, we had $80 billion of net new long-term flows, which is a record for us. That's a lot of money.
That's incredible for one quarter, Larry.
And approximately about $40 billion was in equities, about $30 billion was in fixed income. I'm rounding. Some of it was in alternatives, and some of it was in multi-asset. So it was pretty broad-based, and it was global. We saw flows from Asia, flows from Europe, flows from South America, and quite a bit of flows in the U.S. So we saw a re-risk trade on as people are investing with the idea that, A, we're seeing a synchronized global growth, which we are indeed seeing, most countries growing faster than anyone expected. And that began in the third quarter, and yet And in addition, we're seeing quite a bit of anticipation of the new administration's policies and how they will impact the economy.
Yeah, I want to ask you about that because
Sure.
recently the earnings period has made me feel like sentiment has improved. Things are getting better, but the markets are waiting on tax reform. They're waiting on perhaps a health care reform and infrastructure package as well.
Yes.
How important are these policies, and do you think we'll see changed policies this year? Because that's what the markets are expecting.
Well, let's just back up for a second, because what we are actually experiencing a very slow first quarter. We're going to have our economy growing maybe at 7 or 8/10%.
Under 1%, Larry.
Under 1%.
Wow.
Now, much of it may be statistical flukes. We saw that last year. But what we hear from many CEOs, they're not investing as much at this moment. They may be enthusiastic, but they want to see certainty.
Yeah.
And yet the marketplace is probably more certain of tax reform, infrastructure, and maybe health care. And so the market right now believes this will work out. I would say the activities of CEOs, and you're actually seeing a slowdown in some retail sales. You saw a slowdown in some factory orders. So you're starting to see a little slowdown, and I think it probably is temporary. But let's hope it's temporary, because we don't want to see this type of slow growth going into the second quarter. What we need, as you suggested, we are all looking for a really successful administration in terms of finding a course towards a deregulation policies that will help streamline the banking system, allow maybe a more streamlined mortgage market. And in addition is to what everybody's hoping for is some form of corporate tax reform. We are a country that has the first or second highest corporate tax rate in the world. It does depress where people want to manufacture and be. Now, if you extract all the abilities to deduct, we're not as bad, but we're still in the top third of the highest tax rate countries in the world. If we had a tax rate that was competitive, or even more competitive than most countries, it would bring businesses back here. It would bring foreign companies who want to be here, because we have an advantage that most countries don't have. We have the cheapest energy of any major economy in the world. Natural gas here is a third of what it costs in Europe. Wow. It's a third of what it costs in Japan. It's a third of what it costs in China. So people would love to be here, but when you translate, obviously, the cost of taxation, and it was some manufacturers, I'm told, though, Maria, they can't come here because they can't find the labor, too. So let's be clear. Here we are. We talk about how we need to create jobs. There is also another narrative is we can't find enough qualified workers.
Yeah.
And that's not being discussed enough.
Right.
And so what we need, and I hope this administration really focuses on it, we have to have governmental policy for retraining.
Yeah, that goes to education and retraining.
Education is not being discussed enough.
You're right. We started this conversation talking about this anemic growth that we're seeing in the first quarter. You know, tax policy is the one thing that a lot of people agree on to actually move the needle on growth. Do you think that is, in fact, what will take place? I mean, what's most important? It's the rate? You said the rate. I mean, is it the corporate rate that's most important to you in terms of tax reform? If they take it to 15% or 20%, that's a big deal.
It would be a huge deal if they take it to 15. I think if it's even 20, it's a really great rate. So it's hard for me to see how we get to 15%.
I agree with you.
Unless we do huge deficit spending. So, you know, I pinpointed 25, and I think that's very good. On the other hand, if we could find the revenues, then that'll be good. It is my view, and especially now at a time where we see less immigration. And we are in an economy right now that has some restrictions because what we see in so many countries with weak demographics, that does put a ceiling on growth. And if we do some big giant stimulus package, you may have a pop in growth, but it's probably borrowing from the future. So what I think is where we can come out consistently, and I want to say consistently, if we could have an economy that grows between 2.5 and 3.25, consistently, that's obviously far better than we've had for the last 8 years. That is a type of growth that I think we could build wealth back for so many Americans. I mean, the tragedy that we've witnessed is the stagnation of wages, and if we have obviously more job demand, we are going to see rising wages. So let's be clear, we may have lower tax rates, but we are going to see then, and this is that whole reflation trade that so many think about, we will have rising wages.
Do you think we will see tax reform in 2017? I ask because that's, I feel like, what's holding up the markets. I mean, there's a bit under this market. You said you had a wall of money. You still see that wall of money, and do you think that collapses if it doesn't happen in 17? You think it happens in 17?
Well, I think the markets right now, the U.S. markets are vulnerable for a 5 or 10% correction. I don't think that's an issue. In fact, if it falls 10%, I'd be a big buyer there. You know, I don't like to talk about moments when to buy and sell, tax reform is really hard. As we found out, health care is really hard. I'm not here to suggest whether it's going to ultimately come in 2017 or 18. What I want to see is a real path. And if we could see a real path, and it's fine-tuning how to get it, if we could see a real path that we have tax reform without massive deficit increases, if we could see a real path that can help the lower and middle class in their taxation. So let's be clear, it can't just be corporate tax rate reduction. We have to find ways of helping some of the people who are in need. If we could find that and we could create a consistent economy, let's say at 3%, then I think we could pay for all these tax reforms. So
you think we'll see it?
I hope we will see it.